Welcome to Money Isn't Everything. I'm Mary Wisniewski, Cornerstone Advisors editor-at-large and host of the show. Today, I am chatting with Elizabeth McCluskey, who's a managing director who runs the Discovery Fund at TruStage Ventures. This is a fund that invests in early-stage fintech startups with diverse founders. The convo is especially topical with so much political and legal scrutiny on corporate DEI programs right now. Goldman Sachs, for example, is the latest to erase its diversity goals. On the show today, we talk about the business case around DEI, underfunded sectors, and how ever more credit unions are partnering with fintech companies, and we unpack the why. Here's our convo. Elizabeth, welcome to Money Isn't Everything. It's great to have you on the show today.
Thank you. I've been a fan, and so I'm excited to be a guest today.
Oh, good. Well, hopefully we can continue that experience. And I wanted to just get right into it because I mean, I was so excited to be able to interview you on, just like the importance of having a diverse founder and why and all of that. But especially right now in this moment in this country, it's such a hot topic right now. DEI with the president putting pressure on companies, federal companies to like pull it back. But before we get into all of that, I just want to set up for the listeners, like you're running the Discovery Fund. Tell us about that.
Yeah, so the Discovery Fund is part of TruStage Ventures, which is the venture capital arm of our parent company, TruStage. And hopefully most listeners are aware by now, but TruStage was formerly known as CUTA Mutual Group. We changed our name about a year and a half ago. So our parent company, TruStage, really works a lot with credit unions, and we are distributing insurance and other financial protection products really to serve middle income consumers in the US. That's our target consumer. So we established a ventures arm about 8 years ago to help credit unions sort of keep up and innovate from a tech perspective, but also to think about ways we could distribute TruStage products through other channels, sort of reaching consumers in new ways. So our ventures and our discovery arms are investing in fintech companies that are either sort of insurance distribution opportunities or that are modernizing technology for credit unions. And the Discovery Fund specifically was launched about 4 years ago to invest in those early stage fintech companies. So we're typically coming in at the seed stage versus ventures, which is typically starting to come in around the Series A stage. And then, as you alluded to, one of the big sort of differentiators of the Discovery Fund is that we have a mandate to invest in underrepresented founders. So the CEOs of the fintechs we invest in have to be people of color, women, or LGBTQ.
Um, and I mean, I feel like I'm really throwing down a hard question after after the opening of just getting a better sense of what it's all about. But I mean, we're in this moment in time, probably an extended moment in time where, like companies are really rethinking their DEI policies. And I am curious, are you feeling that pressure from your standpoint? I mean, or fintech is a bit different than a bank, but I am curious how what you're feeling sentimental wise from the industry.
Yeah, and maybe I'll go back before I go to present day,
Sure.
and sort of thinking to the future. So I think, we launched the Discovery Fund in 2021, which was around the time many other companies announced, mandates to support underrepresented founders, to invest in underrepresented founders. It was coming in the wake of George Floyd's murder and a lot of the social justice conversations that were happening more broadly nationally. So I think we were part of a movement, but I think what happened, which frustrated people, sort of separate with what's happening politically today, but there's been a lot of talk that hasn't been followed by action in the DEI space. So there were a lot of corporations who made pledges but didn't necessarily actually allocate funding. So we're proud, kind of over the last 4 years, that we've actually put those dollars to work. It hasn't been kind of like a intention. It's been an actual application in reality. So we definitely kind of fully embraced the DEI movement. Not only because we think it's the right thing to do, but I think because we see the future consumer as being an increasingly diverse consumer who we want to serve and who credit unions need to serve. And in our opinion, the founders who are best positioned to serve those increasingly diverse consumers come from those backgrounds and those perspectives, right? So like founders are best placed to solve the problems that they have firsthand experience in, either personally or professionally. And so I think that's always been kind of part of our statement, is that DEI is not only the right thing to do, but we think it's sort of the strongest business case, and is going to make for the most compelling investments, which are going to lead to the strongest return. So we've continued to feel supported by TruStage in this endeavor. And I think, we're definitely aware that there's been an increase in conversation around sort of backlash against DEI, but we are remaining committed to carrying out this investment thesis.
Um, I think that's such an important point of like the founder needing to know the problem. I've been a traditional reporter in the past, and one of the stories I loved, and this is a different sort of way to think about it. It's more like geographical diversity versus like the human. But I just remember this one home startup was like talking about like helping someone like afford a home that was like under $100,000, and nobody understood what they were saying. But it's like that person knew that market that was available,
Mhm.
sort of thing. So it's like you don't know what you don't know.
Yeah,
But
and I think, yeah, I mean,
mhm,
I think one of the stereotypes, broadly speaking, is like, and this is not in the fintech space, but just to take a quick kind of segue, is
sure,
like women's health, I think, has been a very underfunded sector. And I think that's because of some of the things you're saying about like the people who have traditionally been in the position of writing checks have been white men. And so
right.
they don't really understand when a female entrepreneur comes to them and says, like, this is a multi-billion dollar problem and opportunity. They're like, it doesn't feel real to them or tangible to them in a way that it would if it were a female check writer, for example. So yeah, I think part of kind of increasing the playing field and the opportunity set for consumers and for entrepreneurs is actually also diversifying who is making the investments too.
Yeah, because what's the latest there? Like, I have to think we're still unusually white male for the venture
Yeah.
capitalist
Yeah.
world. Am
The
I right?
numbers but yeah, the numbers aren't great. They are a little bit more encouraging than the numbers that are funding going to diverse founders. So I think, change does start with who the check writers are. And I do think we're starting to see some progress there. I don't know the exact number, but I want to say the percentage of women in check writing positions in VC is maybe in the 20% range.
Okay.
So we're not at parity, but it's better than 2%, which is the percentage of funding that's going to women entrepreneurs.
Oh gosh, that's bad. And to your point of like just like the lack of understanding the women's health, like you could give me a whole tangent on that because I always like to go over with my doctor who's female, like we
Mhm.
gotta get it a little bit better than where we're at.
Yeah.
um, but it is like it's just one of those mysteries where you don't know what you don't know. And I will say, I know a lot of executive males who want to understand, but I also think there's this winds the clock back to when I did a blog at American Banker, and I was trying to take on like feminist issues, and I started to lead with like, hey, the one thing you get going to these conferences at least is you don't have a bathroom line. If you're a female. And it's still, it depends what the event is, but like that's how I started it because I was like, it's a hard conversation to have because it automatically sometimes your audience in having it is going to think you're going against them in some way. So it's sort of like you have to
Yeah.
find different ways to tell a story. And I'm curious on your take on this too. I've heard like um that it's almost I don't wanna put it this way. I've heard that the male executives have to really push for this for it to really resonate with, like, a company as well, and I wonder if if that sounds true to you or if that sounds like a dated concept.
In terms of pushing for supporting diverse founders.
Yes. Mhm.
I mean, I have felt very supported both by our ventures team and by TruStage broadly. And I think the credit unions who were often kind of putting our portfolio companies in front of probably don't necessarily even sort of differentiate or distinguish between discovery fund companies and ventures companies.
That's
So
cool.
I think that's part of the strength of our strategy and our kind of cohesive approach of investing across stages, is that for the most part, these companies are being identified more as early stage companies than companies led by diverse founders. So, like, there's risk because they're early stage. And so, credit unions, we make sure they're aware of that as they're talking about, they don't have a ton of reference customers yet, for example, but they're open to pursuing partnerships with credit unions where there might be more opportunity for the credit union to have input. So, I think that's more the focus. And that's kind of the way we lead with those companies. But if you were to talk to a credit union who was working with one of our portfolio companies, I honestly bet there's a good chance they wouldn't know whether they were in the Discovery Fund portfolio or the Ventures portfolio.
I love that. That's actually sounds good to me.
Yeah,
It
yeah,
sounds really good to me. It sounds like how it ought to be. It's
yeah,
yeah, it
yeah,
doesn't need to be a distinction.
yeah.
Um, well, I wanted to do this. We've kind of already covered it, but it is the one segment of the show where I say, "That's what you said," and it's either in print or on a podcast. But
Uh-huh.
it's something you said on a podcast. And I think you might have been quoting McKinsey research at the time, but it's speaking to the need for diverse teams. And you said those diverse teams are going to outperform those who have all had sort of the same lived experiences and the same approach to solving problems. And so I know we got a little bit into that, but let's explore it a little bit more. I do like I love entering other people's worlds. Just because I feel like I'm endlessly curious, and I'm like, man, how am I even enjoying going into this bank FAQ site? You know what I mean?
Yeah.
Like, what happened in my life? But I do think. Do you have any suggestions or ideas of like how what's a good way for like different worlds to sort of mix and mingle in a more meaningful way? Because I cite this a lot, but I'm like it's always seems to be a golfing event, and I I advocate for more than golfing events for these networking things, but I'm
Yeah.
just kind of curious about your perspective.
I actually just got invited to an upcoming kind of fintech financial services event where there's choices. So I think
Oh,
golf is
good.
choices, but I think paddle is a choice, and I think they might have a museum or like a cultural outing. So I think,
Oh, that sounds
yeah,
fun.
sort of meeting people, in their comfort zones, but maybe giving them an option slightly outside of their comfort zone,
Yeah.
or sort of like a lower commitment thing. I think probably one of the problems with golf is it's such a long day. So it's like I'm not a golfer, but I would be willing to go out for a couple of hours, but maybe not for 5 or 6.
Yeah. It is a
So
long day. Yeah.
yeah, I think giving people the opportunity to step outside of their comfort zones in sort of a contained way in terms of like, a time period, or sort of the downside of saying yes to something that you aren't comfortable with or you aren't familiar with is going to be low. Um, but when you were talking about that quote of diversity, actually, what it was making me think about is just generally kind of this philosophy of credit unions working with fintechs. I think
Mhm.
many times these fintech founders don't come from the credit union world, and they have to learn a lot about kind of the culture and the approach and the way that credit unions work. But I also think I give a lot of credit to credit unions because they're working um, with fintechs who again don't necessarily come from their world, so they're bringing this diversity of perspective of saying this is how maybe the rest of the financial services landscape is thinking about this, and credit unions might have been thinking about it a different way, and kind of by bringing those two perspectives together, they may come up with a third option, or they may come up with sort of a nuanced version of the fintech orientation or the credit union orientation. But we've seen it be successful to have that kind of outsider perspective coming into credit unions to say the way you've been doing it maybe hasn't been working, and here's a way to think about kind of how we can approach it in the future.
Yeah. No, that's really cool, and it opens up part of the conversation I wanted to have with you also is just, like, it seems like the appetite for credit unions to work with fintech companies seems to be growing, and, like,
Yep.
Cornerstone Advisors just did a big report, by Ron Shevlin, and one of the findings was showing that credit unions are swinging up more on how they're viewing fintech partnerships as growth drivers in a more significant way than banks. That's just one data point, but I'm kinda curious. I mean, are you seeing a similar thing? Like, credit unions are the willingness is, on an upswing?
Yes, yes, definitely. I think, as we do our own surveys and as we reference external surveys, you do see those numbers continuing to tick up of like fintech partnerships not just being kind of a nice to have, but then becoming a necessity. And then, like you said, actually becoming a growth driver and something that they want to pursue proactively to say where are areas that we can stretch or that we see opportunities, not necessarily just to fix issues that we have, but actually to be sort of forward thinking and growth oriented. And I
Mhm.
think that is reflected even in our own portfolio across our two funds that we, maybe in the past made some more investments kind of in the core banking technology categories, or we did a lot in like the lending solution space. And now I think we're seeing a lot of opportunity and investments in member engagement, member acquisition. So really helping credit unions think about how they're going to grow their membership bases in terms of who they serve, from an age perspective, from a sort of diversity perspective. So I think, yeah, I do give credit unions credit that um, they're taking that sort of growth oriented approach to pursuing partnerships. But ultimately, there are still a ton of fintechs that are trying to work with credit unions. So there does have to be a prioritization in terms of, what are the fires that need to be put out first. So
Yeah.
that is always one of the sort of things we have to balance and wrestle with is even if a solution is great, just where is this going to fall in the pecking order from the prioritization perspective of the credit union?
Gosh, that must be quite the juggling act, I imagine, where it changes. But I do know one thing I hear a lot is like, oh, our members are way too old, right? Or like not too old. There's not enough young people. So how is this credit union going to survive in the years to
Yes.
come without
Yep.
members? And I'm curious what you're seeing. Gen Z. I mean, there's always whatever generation is coming next or is already present in the workforce. There's always a desire by credit unions and banks to connect with them, but there does also seem to be a disconnect. And I'm wondering, I believe you work with Fritch.
Yes.
Yes.
Yep.
Okay. So that's one example of a fintech company targeting Gen Z. But I'm curious, what things are you seeing that are interesting on the fintech front that could potentially help credit unions drum up more Gen Z members?
Yeah, and I think Fritch is a great example because I think each each party should be playing to their strengths, right? So I don't
Hmm.
think the credit union is suddenly going to be able to kind of embody the voice of Gen Z and have the branding that appeals to Gen Z and kind of like know necessarily what their sort of talking points and even their vernacular is. But credit unions still offer really solid products that could be good fits for the needs of Gen Z. So whether that's, high interest savings accounts or an account to help them save for their first home and then actually issuing them a mortgage when they're able to purchase that, giving them an auto loan, those are all things that credit unions already have existing product suites around that they can
Hmm.
offer sort of compelling um, options to Gen Z. Where I think they've just struggled is in the marketing and the messaging and like getting that in front of Gen Z. And so I think that's where fintech partnerships can play a big role is that the fintech, especially again in an example like Fritch, where it's coming from Gen Z founders. They have an authentic voice to speak to Gen Z and say, we know what you and your peers are talking about. We know how to talk to you about these financial issues. And let's just help you connect the dots between what your problem areas and what you're looking for are, and some solutions that can come from credit unions, which might not have been the first place that Gen Z would have looked without something like a Fritch being that kind of intermediary.
Yeah, the brand awareness thing. I mean, it's so important. Well, for any company, but I
Yeah.
do think credit unions in particular need a better push for themselves on the brand awareness. But also, it kind of unpacks like interesting trends. Like Fritch, for example, like puts a lot of attention on like how Gen Z likes to share their salary, or you just be much more transparent with their money habits. And like to me, that's a notable thing to take notice of. For any kind of institution.
Yeah, yeah. And I think kind of a trend on the opposite end of the spectrum, but still relating to Gen Z is
Yeah.
we haven't necessarily made any investments in the space yet, but kind of have a few on our radar and seeing more companies doing this, which is meeting the needs of the older demographic, but also
Yes. I'm glad you brought
finding
this up.
finding a way to bring in the next gen. So whether that's, around topics of inheritance and estate planning, um, like meeting the needs of the asset owners who are currently credit union members, but
Mhm.
engaging their kids and their grandkids to say, we want to give you a good experience as you're figuring out how to, you know, distribute your parents' funds, or close their accounts, or hopefully transfer them to a new account in your name in the credit union. So things like that, I think, everybody has talked about this great wealth transfer that's going to be happening over the next decade. And I feel like we're still kind of on the precipice of this, but we're still not necessarily fully ready
Mhm.
for just how much change there's going to be and who holds the wealth. And so, just as we're starting to see some fintechs emerge that are addressing that issue, being kind of cognizant that you're not just meeting the needs of a Gen Z or of like a boomer generation, but finding a way again to help them kind of cross the bridges that they're going to need to cross together.
Yeah. No, I'm especially interested in that because I do think it becomes an area of neglect just because it's like you're already member, customer, and
Yep.
so you think you don't have needs, and then of course ageism cuts both ways, cuts against
Yep.
younger people, cuts against older people, and no, I think it's a really interesting area of fintech. Like Charlie, for example, the neobank that is offering products for the over 62 crowd to me is like an interesting illustration of going after an older audience. But I am curious because you have such a intel into like, hey, this is what's interesting right now in early stage fintech. I mean, as you mentioned, some of them don't have clients. So it's like, how do you think about, hey, this is actually interesting. The credit union might like this, or like what goes into your what
Yeah.
goes into your thinking patterns to be like, that's interesting or that's
Yeah.
not.
It's kind of a combination of things. I mean, one thing is, does this idea and does this conversation feel new, or is this one of 4 or 5 versions of the solution I've heard about in the past, several months? So I think if something is totally new to me and the entrepreneur is actually educating me on, the scope of the opportunity or the problem, that's always interesting to me. It doesn't necessarily mean it will pan out, but it means like they're doing something differentiated versus having to choose the best among a set of competitors who are already kind of doing the same thing.
Hmm.
But then we definitely do a lot of validation and sort of cross-checking with credit unions. So, um, we are regularly meeting with credit unions to hear what their priorities and what their needs are. Again, going back to there can be a ton of great solutions, but they're not all going to get implemented at the same time. So just making sure we continue to hear what they're talking about from a prioritization perspective. So I think a big theme going into 2025 is fraud and
Yes.
cyber like protection, digital privacy, just thinking about how credit unions can protect their members, kind of keep a good member experience for them to prevent fraud, or if it happens, thinking about how they can sort of rectify that for consumers. So I think that's an area where hopefully there's going to be some more emerging solutions that we
Yeah. Are there any like particular promising technologies you think that would be a good add-on for a credit union to help get in front of fraud versus have it happen and then try to tackle
stay tuned. I mean,
it?
we're looking at more in the space. I have talked to a couple of companies recently that are trying to, empower the consumer or empower family members of somebody who's aging who might not kind of be as savvy when it comes to scams and things like that. So, I think there is going to be more of a theme around trying to empower the consumer and enable them with tools to help them kind of combat that social engineering that they might be facing when it comes to some of these scams.
Hmm. Yeah, I'm overwhelmed by the amount of fraud, and I'm like, oh man, I'm gonna I'm gonna fall for these traps left and right. But I hope not to. But I just
Yeah.
the likeness of people is like bonkers to
Yeah.
me. Of like, oh,
Yeah.
that's actually not a human.
Yep. Yep.
Um,
And I think
but
that is one of the stereotypes is that, you know, people who are smart won't fall victim to these scams, but in fact, it can happen to anybody. So I do think there is a need, holistically from the financial institutions to think about how they can kind of put as many resources towards combating this as these scammers are like the scammers are, spending a lot of money and they have very sophisticated technologies to figure out just how to get kind of in people's hearts and minds effective.
yeah. And I wanted to be because it's those out of wallet questions. I remember it was a few years back now, but like, so I was definitely well into my 30s and I had to call a bank and answer one of those out of wallet questions. And it was something like, I don't remember, but the answer was Sailor Moon. I was like, I clearly, hopefully settled on this when I was very young.
Yeah, yeah,
And now I'm embarrassed. So that's how that went. So that's my call to the industry to stop that.
yeah, yeah. Yeah, I
um,
mean, I think there's gonna be kind of a rise of, like, biometric, identification, so you won't have to answer those questions necessarily. It'll
that'd
just
be
be, like,
great.
just by talking, potentially, it can authenticate your voice or, something like that.
Talking would be even better. I don't know if you've hit this, but I've hit it when it's like IDing my face and it's like, no, that's wrong. And I was like, oh, that's because I just woke up and I look wherever I look. I'm like, clearly, something didn't
Yeah,
go right
yeah.
last night, but whatever. And I wanted to talk, we're coming to the end of the conversation, but I want to make sure your prognosis for 2025 early stage fintech. What are you thinking? What are you feeling? Good, bad, somewhere in between. What are
I
you
know
predicting this
I
year?
don't wanna be, like everybody else. Like, I think generally the mood is optimistic within
Hmm.
fintech. I think people are feeling better about this year than the past few years. So I agree with that, but I'll try to be a little bit different. Um, I do think that even from our own portfolio, I've seen like it really took a long time for companies to kind of take their medicine and either shut down or kind of go to those lower valuations. So I think that has still taken a while to cascade through the industry, especially down to the earliest stage companies. So there probably will still be, a few more flat to down rounds this coming year or M&A that happens at valuations that are lower than a company raised its last round at. But I do think we're going to start to see a pickup in activity in M&A, potentially in IPOs. And I think, again, that will all trickle down to the earlier stages and have a positive impact on valuations there, but probably still early in the optimism cycle.
Okay. I like how you put it that way.
Yeah.
What about for the founders who don't get a check? Any advice for them? Like, what's their next move? If there's a general principle to guide them.
Well, one of the things I always tell entrepreneurs is, unless it's a hard pass because it's just not a fit from like an investment thesis perspective, an investor can glean a lot about an entrepreneur from how they communicate kind of in those in between phases. So when you're not necessarily actively fundraising, but I say, let's keep in touch for your next round, like, do you actually add me to an investor update or do you reach out to me individually and give kind of updates on key metrics, learnings, things that have happened that have caused you to sort of shift the way the business is going? I think it's worth founders putting time into building sort of a prospective investor update list and giving them some meaningful updates at a regular cadence to keep people sort of aware of what you're doing and remembering your name because then when it comes time to raise again in like 12 or 18 months, they have a little bit of a sense of what you've been up to and you don't have to completely restart that conversation.
Yeah. No, that's really important. So it does require, I guess, a bit of vulnerability to be like, hey, I was rejected, but I'm still going to let you know about
Yes.
me.
Yes. Yes.
Yeah. I can feel that when I've pitched essays in the past. Rejection. I'm like, here I go again.
Yeah.
But it's important. It's important. All right. One last question for you, but before, how should people reach out to you or any things you want to say before we end our chat?
I mean, people can always reach me on LinkedIn, but I'm also happy to share my email. It's elizabeth.mccluskey@trustage.com. So yeah, feel free to reach out. I love to hear from, whoever your listeners may be, whether it's entrepreneurs, credit unions, others in the industry, other fintech investors, because I think so much of what our job is just connecting people who haven't necessarily met, but who should meet. So even if we are not an investor or kind of don't play a role in that way, I'm always happy to help make connections between people in the industry.
Wonderful. That's a really important gift to be able to give. And Elizabeth, last question. What is the a photo on your phone's lock screen or image?
Oh, it's my family.
Aw.
2 kids. My son just turned 2.
Aw,
Daughter is
congratulations.
Thank you. My daughter is 4.5. So,
Aw.
yeah, they keep life
Okay.
fun and crazy.
Good. That's how that makes everything interesting.
Yeah.
Well, Elizabeth, thanks so much for being on the show today. It's been a true delight to explore early stage fintech with you.
Likewise. Thank you so much, Mary.
Okay, one thing I learned is the growing need for intergenerational tools. Helping younger generations handle the money issues of their aging parents, for example, is only becoming ever more important, higher and higher stakes. 2 weeks from now on the show, we're dropping a flavorful conversation with Sam Miller, who co-founded Kashish, a fintech startup that builds itself as a buy now, pay later alternative, and it lets consumers pay for stuff online using multiple cards. It's an interesting proposition, and it was a vibrant chit chat with the startup CEO. Catch you then, and maybe even catch you sooner, because if you're at FinTech Meetup, please hit me up, or even better, come to my panel on Monday afternoon. It's gonna be a vibrant time. See you then.